December 28th, 2022. Halfway through the week, only a couple trading days left this year. Pretty interesting. Keep in mind there is no trading on Monday next week. I think everything is off for New Year's. So, December 28th, 2022. Pardon me. Halfway through the week, only a couple. Sorry about that. I've got a few things I guess I want to update. One, I'm going to try and stay a little more focused on the chat, what's going on in the live chat. There's been some back and forth there that's been a little less than constructive. So what we'd like to have is a constructive conversation going on within that chat, the live chat. Really, and I should probably be more attentive to you guys who are watching me via live stream. Please keep in mind I do have a visual impairment, which is the reason why I wear the sunglasses. So it's a little hard for me to have it on I can't read it from a screen. So if I have to, if something happens in there, my producer, I'm going to have her wave at me or something so that we can, so that I can talk about anything you guys want to talk about in the chat, anything, stuff like that. Questions you might bring up, and maybe address some other issues and stuff like that. All right. So, stock market, right? Okay, today, big sell-off day in the market. You can see illustrated by this big old red candle over here. And what does this really mean? Well, the whole conversation of the last couple of weeks has been really around the idea of the Santa Claus rally. Now, I didn't know this. I assumed that the Santa Claus rally was so common that it always happened. But the truth of the matter is, I think the statistics are less than 50% on a win rate of the Santa Claus rally. It's actually kind of a rare thing for it to actually happen. And if I think about it, last year we didn't actually have a Santa Claus rally. We actually didn't really rally until the beginning of January into earnings season, which really kind of brings about the point of seasonality and what happens in different seasons. And one of the things, there are different things that bring different elements of seasonality to a market. Options expiration days, witching days, they call them. There's an element of seasonality where you can expect 1 week or, a couple of days and 1 week of every month that you're going to have some real erratic price action. Pretty commonly, usually it's nothing insane, but normally it does create some sort of erratic behavior within price. Other things that can be seasonally are moving into an earnings season. This will typically see some sort of bullish developments a lot of times. And some of that's driven by something like a rumor, or such as, there's kind of tropes, right? Or cliches within the stock market that say buy the rumor, sell the news. Well, now what you're getting into is a form of seasonality that they call rebalancing. Okay, market money managers sell losing positions to harvest gain or to harvest losses for tax season. Money managers will buy other positions because of how their portfolios are supposed to be balanced, right? If you're going to manage other people's money, you typically have to file some sort of system that says, hey, I'm going to buy 50% stocks and 50% bonds, right? Well, earlier this year, bonds took just like an utter bludgeoning as far as the equity side of bonds. So a lot of guys were selling out of their bonds. So now you have a lot of guys who have to flip out of stocks and back into bonds because their portfolios are required to have the 50-50 mix, right? There's other mixes like that, right? And you can look those up out there. I'm not here. I'm not a portfolio manager. The whole point of the show is not really to talk about portfolio management, but what it is to talk about is the idea of money moving. Okay? So with that, though, the reason it's important is because if you look at things like Tesla is literally 70% off of its all-time highs. and really honestly peak to trough this year. It's lost 70% of its value this year. So what you had happening in Tesla as you're getting into the end of the year is some margin call for some guys who, bought too much Tesla, and now you're getting this really strong capitulation, right? I think you're getting some of the same stuff with Apple. It's not as bad with Apple. Apple's a lot more sturdy stock, a lot more proven company than Tesla. But at the same time, you're starting to see that. And I think we will, as we begin to move into earnings season, as we see these earnings, if the earnings are less, I think you'll see more and more of these margin calls going into the Q1 of this year. Also, given that if the earnings guidance is down going into Q1, so we're going to get Q4 earnings coming up in the beginning of January, second week of January. The banks will report their earnings for Q4. If their guidance for next year is low or way underneath where we were at before, you could see some pretty nasty things happen. Again, if they think that they're going to do okay, they're going to weather the storm well, you may not really go anywhere. But again, none of this is to really predict anything. This is just a thought, and it's a pretty common thought and pretty easy thought to have. It doesn't have to bias you one direction or the other. And to be honest with you, you're 2 weeks away from earnings season, so nobody's placing trades based on this concept. But this is basically just an example too of seasonality. And so we want to be aware of the different seasonalities out there. You want to be aware of the cycle into tech and the cycle into either cyclicals, what they call cyclicals, or industrials, right? You want to be aware of how that money moves. You could have looked at, if you looked at the market sectors from yesterday for the S&P, for SPY, you would see XLU, XLI, XLE, the three defense sectors, 4 plays. They're up, and they're up almost significantly where the rest of the market was down pretty hard yesterday. Okay, so where things like XLK is dragging things down and consumer discretionary and things of that nature. So you're looking at a place where the retail side of things are slowing down, and you kind of want to be aware of that. And the reason you want to be aware of that is, look, you may not be like me, okay? You might trade multiple different charts, multiple different stocks with things. I trade only SPY. I won't let myself run around and chase different things. Sometimes I feel bad that I don't. I may start adding some other stuff in there as my account continues to grow and get bigger. But for the most part, I trade SPY. I want to be aware. Here's the other thing about this, and the reason why you want to be aware of seasonality, okay? The reason you want to be aware of seasonality, if you're going to trade an index like SPY, QQQ, IWM, right? The reason you're really interested in seasonality with these guys is because this is an index, okay? It's connected to everything. And this index is connected, these guys own a lot of the same stocks. This is the S&P 500. These guys own a lot of the same stocks, a lot of the same companies that QQQ owns, okay? And even some overlap with IWM. Now, not as much with Dow Jones, although S&P has, the industrials and some of those things. But they're all sort of connected to each other, okay? So the thing is like, so goes one, so go they all, right? So you want to be aware of what may affect each of these the most, right? And there's a lot of reasons for this. If you ever traded penny stocks, right? One of the things, when you build a trade plan for your penny stocks, right? One of the very first things you'll look at on your trade plan is you're going to want to see what the float is, okay? On that. The reason you look at the float is because the float is going to give you an indication of what that price action is going to look like, right? It's going to help you manage some sort of expectation if you're trading penny stocks. You want to know what that float is and how that moves. Well, there's a float for SPY, but it's huge, and it's not going to matter, right? What you really have to manage here is the catalysts that are moving the market around. Now, again, you don't want to be biased for or against a catalyst, whether it's positive, right? You don't want to come in thinking that, oh, CPI is going to come out, and it's going to be bad, and that's going to make the market go down. The market has gone equally as much up on bad CPI data as it has gone down, right? And it's even had, we can go back, there's other things. Here, right, look at this. Powell says they're ready to start doing 50 basis point rate hikes, and they might have to do a bunch of them. But because he said it's 50 basis point rate hikes, you got that big boner candle right there. So the thing is, and that happened. I'm sorry, bros, but there's no technical analysis that's going to tell you that's going to happen, right? As a matter of fact, if you were watching this whole thing right here, your thought is it's probably going to break at this point. And it's a pretty safe setup that it's going to break right there, especially given how close you're getting to losing your momentum. So this one freaking day of Powell saying one thing, right, that changed the dynamic within the market for that period of time, okay? So, again, I personally, I think that all that stuff is important, knowing seasonality, knowing what can happen, what's likely to happen, who's active, There's some stuff, if you go back to the summer and look at the behavior of the summer, if I had to tell you the truth, I wish I just took the whole summer off. I enjoyed trading. I learned a lot about trading through the summer, and there was a pretty good summer rally up until Jackson Hole. But in all honesty, I wouldn't have lost anything, and I would have been able to, if I came back around the Jackson Hole schedule, I would have been able to make plenty of money. I had plenty of green days off of the Jackson Hole event. As a matter of fact, one of the best trades I had this year was swinging through the Jackson Hole event. I already knew what it was going to be like. I knew where to put my position and stuff in, and was a very confident trade for me. I was very happy about that trade. I did very well with that. So if we had more Jackson Hole events, I would probably be able to be successful, a lot more successful as a trader. So the thing is when that happened, I could have ignored the whole summer, traded the one Jackson Hole event, and basically know what the chart is, and I would be very green at this moment, right? So again, going back to another thing I said yesterday is some of this is knowing when not to trade. When do you stop trading? Well, guess what, man? As we get closer to the weekend, it's another 3-day weekend. So what do you think is going to happen on Friday? Okay, here's a prediction that seems, maybe it's insane to think that there's not going to be any volume going into a 3-day weekend. Oh, could that ever happen? Oh my gosh, I'm so crazy for predicting that. Yeah, guess what, man? First of all, having Monday as a 3-day weekend is usually rough. Most guys want Friday, Saturday, Sunday, right? So we're going to have Monday. These guys are going to take your big money, the guys who move this market around, they're going to take Friday off, right? They're going to get their head clear, and they're going to come in, and they're going to start thinking about what they want to do going into Q4 earnings, okay? That's really what we're going to look at. And then coming up into that, too, you're going to get December CPI going in January. You're going to get, a whole new round, non-farm payrolls, jobs data. And on top of that, you're also going to get the end of, what do you call it? You're also going to get the end of the seasonal job things, right? So they're going to be looking for those job losses to start to climb. Now, again, if you don't think that the pro traders are thinking anything about this, you're insane, I will tell you right now, and maybe that's a dig I shouldn't throw out there, but I guarantee you, if you don't think that the guys, the real pros, aren't out there looking at market data, market catalysts, they're not thinking about how that's going to value the market or any of that stuff, you're the one who's nuts, not me, okay? You keep going doing what you're doing, that's fine, but like, I don't think any true professional consummate trader is not thinking about the environment that they're trading in. I don't think that they're, and ultimately for risk, okay? These guys are talking about seasonality, how these earnings might act or look or think or behave. They're all looking at that stuff just as a level of risk, right? What's their risk exposure in a negative economy, and with negative catalysts coming out. So this is where we're sort of talking about seasonality. You want to think about seasonality. Just the same as you might keep, if you were trading we traded penny stocks, I build a list of catalysts, right? Because within any penny stock trading, there's only like so many actual kinds of catalysts that you can have out there. And we would rate those catalysts as to the risk level that you should trade on with those catalysts. And this is a very, honestly, the bludgeonings I ever took in penny trading, on the side of where I actually got good at that, the where I got bludgeoned always was in a catalyst that just sucked. So the key for us in penny trading was typically to know whether or not how valuable any catalyst actually was. All right. So it's not any different with seasonality. It's not any different with market conditions. It's not any different with market sentiment in this thing. And I think I think you also lose a big piece of like the fun and the excitement around this and the intrigue that's around it. So, all right, that's going to do it for my sort of sermon on that. Basically going today, again, so we're doing our trend. You are lower highs, right? There's your high, there's your high. Lower lows, you just broke down below, right? Again, you will have, and you are getting the 18. You're getting the death cross of the 18 under the 100. Again, that does suggest that you will typically go back out and take out the previous all-time low. Okay, there, you're close to all-time low. So we can probably expect that at some point we're going to move back below 350 here at some point. Again, that's not a reason to run in and buy a put right here, okay? If you're shorting at this point here, that's called shorting in the hole. Not a smart idea, typically. Really not, especially with 3 days left, 2 days left, trading days left of the year. I took one trade. I'll say, let me say this really fast, and then we'll go through the rigmarole, okay? Right now, I am changing the way I trade, and what I am looking for is a 3% gain of my account every day. Now, it can be a little bit more, but it can never be less. I'm always locking in at 3%, okay? Now, this is what I believe. I believe there are some guys out here who managed to catch these entire big moves. They've done a really, really good job of figuring out how to call the bottom and how to call the top. I think they've done really, really good at that. I am not that guy. I've never been that guy. Anytime I've ever tried to be that guy, all I've ever done is gotten my ass kicked. So if I go back to basics, if I go to true basics, right, my goal should to be end of the day with a dollar figure that I already knew I was going to end the day with, okay? So, and if you go back to the trading basics, if you listen to the legends of traders out there, what they will tell you is consistency is king. That is where you make the money. That is it, right? So you set yourself a goal. Maybe that goal is $100 a day. Maybe that goal is, whatever it is. You pick the goal, right? As of right now, my goal in that is 3% of my trading account. Since I have gone back to this, I have managed to double my account size. I have suffered far less losses, and I have recovered those losses very, very, very quickly, okay? You might want to call the bottom and top. You might want to try and capture a whole move. You may want to do that. That's not worked for me. If you want to have a conversation about that, that's fine, how you think you can do that. But genuinely, I don't think that that's how I'm going to trade. Ultimately, my goal is to make $400 a day at some point. That is going to be relative to that account size. Guess what? I'm not going to take my $250 account and generate $400 a day. I wish I could do that. I wish everybody wishes they could do that. Unfortunately, it's really not possible. And if you figured out how to do that, if you've somehow done it, you are worth way more than $400 a day. You should write Goldman Sachs a letter explaining what you do. And I'm sure they would love to give you tens of millions of dollars. But at this point, I have to basically rebuild the whole account. I'm building it slowly, piece by piece, little by little, and dollar by dollar. And so far, it's working. It worked before when I failed at penny stocks and I got good at trading penny stocks eventually. This was the process I used. It's the same process I used. So that's it. One of the other things about it is I've stopped envisioning a point where I want to pay the bills with day trading, okay? Right now, okay? My account doesn't generate enough money. I have failed for this year to be that consistent to where I feel like I can do that. And I will get to a point where maybe that can happen. And we will see. I have those things lined out and figured out. We'll be going more into that coming into the following year. I'm going to focus more on my trades, my trade reviews, what trades I took, why I took them, why I took profit, where I entered them, what my risk was, and stuff like that. So anyway, that is what I'm going to move into for next year. But for right now, I'm still putting some of the spreadsheets together and things in order to track all of that. So until I have that together, this right now is a current format and we're going to stay with it. So again, step number one, what is our trend? Our trend is down, lower highs, lower lows, right? Our bias is underneath the 18-day moving average. We are looking for put positions mostly. This is what we're interested in, okay? Again, you're coming into the lower Bollinger Band. You've kind of keeping that in, you're really staying right in here in this embedded reading in the slow stochastic. Even though you lost it a little bit, you managed to recapture it yesterday. So again, you're still really looking, the pros here are still looking to sell any rallies that might happen, okay? Any bounce up you get, they're going to be hammering it down aggressively to one degree or another without some sort of new catalyst coming on that means this has a reason to go up, okay? So this does not really tell you how to trade. None of what I'm talking about tells you how to trade, okay? All of this stuff that we've just gone through is to put the market in context. And the reason we want to put the market in context is not because we're trying to teach anybody how to trade. As a matter of fact, I'm 100% against me going in and giving you my exact trade setup, okay? The thing is my trade setup is a hodgepodge of different things, okay, that I've learned. It's stuff I've learned from Humble Trader, from Shadow Trader, from David Frost over at, from Michael Schwartz, from Ira Epstein. All the stuff I have, all these guys who I have looked at and I've learned things from, valuable things from, all have gone into building my trade setup, that deal with a lot of things. And a lot of it is around my comfort of risk, right? I don't like long exposure. Being exposed to this market for more than an hour is very painful to me. I don't like it. And I'm not really interested in changing that, right? You have to decide when is something a character defect and when is it just your character. And my character right? Part of the reason I want to do this is because I'm not comfortable just leaving my money exposed anywhere. I want to move it into something that I can know I'm going to return on, right? Does that mean I'm going to be a 7-8 figure trader? Probably not. But my goal is never to be a 7 or 8 figure trader, right? I have no reason to ever own a fucking Lamborghini. So, and nor would I. Even if I could afford one, I wouldn't buy one of those. You know, yeah, they're sexy as hell, but you can only drive them like 10 days a year, and they're expensive to maintain, and you're constantly probably stopping to pick up the freaking alternator off the, off of the ground. So, if you're trying to go, look, those S&B boys, the S&B Capital, those guys are trying to be 7-figure traders. They want to be monsters. They want to be legends in the market. I don't want to do that. That's not what I'm trying to be. If I can take this and figure out how to generate $400 a day, that puts me at a 6-figure income. That pretty much gives me the financial freedom to do anything I want or need to do. Okay, so that's what I want out of trading at this level. That's what I want. Other guys want other things. Okay, they want to be the big shot. They want to say, "Oh, I got the biggest wins" and stuff like that. I want to be the most consistent. That's what I want to be. I want to be the most consistent motherfucker on the trade floor. That's what I want. I want to show up every day and be like, "Yeah, Russ, just every day," right? I want to be the fucking, the working clock that's just right on time every day. Okay, so. I hope that helps you understand a little bit about me. I hope that helps you understand a little bit about what we go through when we sort of check the weather over here of the chart. I hope that makes any sense. And I hope that allows you to sort of open up the conversation. What tends to happen down here at these lower Bollinger Bands, right? What is this? When you look at this and go, oh, like you're shorting in the hole. Here we go. Should we short, right? You're deeply oversold, right? You've got that going against you. And if you go to even some of the longer time frames, you're going to be oversold again, weekly time frame. You're going to be oversold on the monthly time frame coming up. You're really not going to turn that around. So not in the next 2 days. So the thing is like, what is that going to mean? Well, it means going into January, a lot of guys are going to start to cover their shorts, man. Like seriously, that's going to start to happen. And again, that's not a freaking market prediction. Shorts have to cover, okay? That's not a prediction. That's just something we all know that happens. And we know, right? You can go back on the stupid chart and you can look and see where they started doing it, where they started coming out. You can be a part. You look, every single one of those rallies, every bear market rally started as a short covering rally. Every single one of them. And they all did it off of the lower Bollinger Band. There was no point where the short started covering up here at all, any point this year. That's never happened. They always go crazy right off of that lower Bollinger Band. So you know it's coming. That's not a prediction, right? That's just how it works.
There's a comment.
Anyway.
Comment.
We have a comment. There we go. So I don't know who that was from.
SRV charting.
SRV charting. All right. We're getting ready to wind up. I want to see if there's anybody who put anything in the comments I need to respond to. Yeah, they want to see the trades. I get that. I get that you guys want to see the trades. I see that. I will definitely be sharing the trades going into next year. We will be doing a lot more focus on trade review. As far as that goes, it's going to be a lot less of this. It's also going to be a lot less focus on economic factors and economic data and stuff like that. As far as that goes, that is something we are going to shift away from, because I don't. Again, you can go watch Ira Epstein, and he's going to give you a much more accurate economic picture as to what I'm going to do. You can go watch Steve Van Meter. He's going to give you some stuff that's going to be really, really good as far as that goes. There's any number of guys out there. Hell, even, I mean, like him or hate him, but like Charlie at Zip Trader actually doesn't do a very bad job of giving you some like real easy DD around markets and market stuff like that. So you may not like those guys, or maybe you do, but they've really got this segment covered. And one of the things I want to say about, before I wrap this up, one of the things I really want to say about, the whole thing is that this journal is supposed to be a journal, right? So there's a lot of it that's supposed to be expressing as you would a journal, right? You have experiences every day. You write what that was, what you experienced, and then what you felt around that experience, okay? What you think around that experience. So that's an element of, this is a journal. I'm doing that. That's what I'm trying to do. But also, you have other elements within a journal where it's like, not only how did I feel, what did that make me do as far as placing a trade goes? How did that bias me, right? And so we're missing a lot. I'm missing a lot of that information in the form of a journal entry here. And it is lacking. It is bad, because you do need data sets that show where you are weak as far as trading goes, where you are strong as far as trading goes. There's a lot of stuff around that there's challenges to it, right? That if you have that data set, hey, I take a trade every time we come out of oversold, right? I take a trade, I go long every time we come out of oversold. How many times does that make you money? How much money does that make you? How many times do you lose money? How much money do you lose, right? I have none of that data really collected at this point that gives me a statistical model for my performance based on a trade setup such as that. Okay, mine's a little bit more nuanced than that, but there you go, right? And again, how often does that trade get you to your goal? I took that trade in the end of the day. I've had one trade today. I took it into the end of the day, nailed my goal, was like in and out, literally 4 minutes. Not the shortest trade I've had probably all month. Nailed my goal, took my money, dusted my hands off, walked out the door. I'm done, right? I'm not gonna sit around hoping for more money at that point. Okay, which is crazy, because there were 2 really, really good trades before that, and I'm sad I missed them, but here we go. So yes, going into next year, we will be talking more and more about sharing my trades. It's going to require some screen capture stuff and me to put up more slideshows and things. So it is going to take a little more work. And so we may only do 1 episode a week of that. I don't know just yet. We are going to test some things out and see how that goes. So I know you guys are very interested in that. One of the things part of the reason I haven't done a lot of it now is because some of the stuff I've been doing, I don't know what I'm doing, and I've obviously done it wrong. You can tell by the videos I've posted with my losses this year. But I believe that I have worked through most of that. I believe that I have basically gotten to a point where, like, okay, I have a really strong picture of what I need to be and what I want to do. So I don't want to be insecure about my trade and about posting what those trade wins and losses are. So that's where I'm at is now I think I finally have that picture, and I can come in and talk to you guys and share those things with you, and we can go over that a little more. So anyway, that is going to do it. Looks like it. No, I will not live stream myself trading. And that's the question. I will not live stream myself trading. And there's a couple of reasons for that. One, live stream trading is really, really boring to watch. It's really boring. Second of all, there's a few things that I don't want to be associated with. There is a pump and dump group out there that what they will do is live stream a guy trading, and they will tell you in the live stream what trade they took. But what they don't explain to their newbie followers is that live stream is literally running minutes behind the market. And so they catch a trade, it's running up, their followers see the trade happen, so they try and take the same trade, and by the time they're in it, they're getting dumped into. I know there's a few guys, I'm not going to say any names out there, there's some guys who are really notorious for doing this. It's gross, it's terrible, it's disgusting, and I will not be affiliated with anything such as that. Second of all, I may do some recording and do some playback of my trades, but my trades are pretty laid back. They're not wild and crazy all over the place. There's not a lot of entertainment factor in there, but we'll definitely take a lot of screenshots as far as that goes. But no, I definitely will not be live streaming any of my trading. Yeah, that's the other thing too, right? Is that nobody watches the live trading. Nobody does watch the because they're busy trading, right? And again, really the point of this isn't to teach anybody how to trade. The point of the show is to get the conversation going around trading. This industry, this culture, it struggles so hard to talk about trading. It struggles so hard to talk about the markets, right? It's all either like GameStop on one side, or I hate Jim Cramer on the other side, or Trading Guru A sucks and Trading Guru B, right? But nobody's talking about, hey, I was using the EMA. I followed it through this trade and it was really, really good for me. I set my risk as this, I set my stop as that. Or like even a place where a person can be like, hey, can I use, can't even ask the question, can I use the EMA to do this, right? Or can I use the RSI for that, right? There's no conversation around it, right? And so the thing is like, nobody can really get better or worse at trading because they're not talking about trading, right? They're either just shooting each other down or shooting each other in the foot, and we don't get better as traders, right? There are some places where I've had good conversations around emotions and trade psychology, but even then, those get run over by basic tropes. And tropes, the cliches around that are very nice, right? There's a lot of stuff that's, no FOMO, right? But, okay, so when I was a penny stock trader, there is a difference between FOMO and buying a breakout, okay? And I didn't do any breakout buying through the entirety of 2020 because I was afraid that I was FOMOing. I didn't know how that worked. It wasn't until like July of 20, right? That's why when I did get successful as a penny trader, it wasn't because I was buying breakouts, it was because I was buying reversals. But what would happen what would happen as a, is I would talk about FOMO and everybody would just call it FOMO, right? There was no conversation around it, right? They're like, oh, don't chase, man, don't chase the market, right? But there was no idea. Or what would happen is the move up, and I remember this was really bad. The move up would happen, right? And I think, awesome, that was the move up. And I'd have all my support and resistance lined, and it would go up through the support and resistance, and then it would come back down. Well, I didn't know that move up was the move. That was it, right? And so like for the first couple of weeks that I'm trading, we would come back into support, and it would fall through support, and I'd stop out. And then you go to the next support, and it would fall through that, and it would stop out. And I would never, ever catch the next move up again because there's not another move up, right? When the rally happens, it's typically the rally. You can catch bounces along the way, and sometimes you catch another rally at some point, but usually the move up is the move up, and I didn't understand, right, that just because it came to what was a support level didn't mean that support level was going to hold. But again, a lot of this was around the idea that there was no conversation in this. There was no point where I could get on the screen and say, hey, this is what I did. How is it wrong? Could somebody please point out to me, right? And as a matter of fact, it's very interesting. I had joined Stocks Rock's live trading chat room, and I was watching. I don't know if anybody knows the name of the guy, the Stocks Rocks guy that trades and stuff. But I was watching him, and he traded a breakout, a high of the day breakout, and literally made like $15,000 in like less than like 12 minutes. It was, and when I saw it, I went, oh my God, what have I been doing? And so really just want that conversation. So anyway, that is going to do it for me. Russell Journal, written, edited, and hosted by me, Russel Liss. I hope you guys enjoyed the show today. Give us a like, thumbs up if you want. Until we're written. I gotta do the whole thing. Get the whole thing. Written and hosted by me, Russel Liss. Our producer is. We are produced by Social Media Shows. Our executive producer is Pureza. And until tomorrow, pretend I said some sort of catchphrase.